Good early afternoon on this beautiful, sunny, gorgeous, glowing, stormy, potentially severe weather day in the greater Bloomington metropolitan area in central Illinois. And of course, T-Mobile is going to give me problems. I wanted to bring out a new tool, but because T-Mobile sucks, it's probably not going to bring it out. Yeah. But silver, it's hitting critical support right now. Look what I've done for you. Did I save that? Look at this. Look at some of the stuff I've done for you on Fiscal and Monetary Policy Friday. U.S. home calculator. In red, U.S. home prices an ounce of gold. In blue, the median home price. Hold on. We're not looking at the right chart. Where's the chart I want? This is what I want. Median sale price of U.S. Let's turn the phone around so we can see this better. Median sale price. And let's turn the volume down, or the brightness down. Hold on. Let me get this all ready for you. Bam. No, not that. Go back here. All right, turn the phone. Check this shit out. This is very important information on Fiscal and Monetary Policy Friday. And this just shows you the power of gold. In green, it's U.S. median home price sales of new homes in the United States. And red, it's in prices of gold. Now you start about 1961 to 3-ish, and both at $10,000, or a little bit above, about 12, 13, maybe $20,000, whatever that line is. Just say 20,000. And then you see as we got to 1980, you only needed about $5,000 in gold. So you increased, you made it cheaper for yourself to buy that house. But in cash, it was running about, I don't know, it's about 65,000. Now, as we progressed to 1990, it became a little bit more expensive in gold, 10,000, but still a few thousand below what it was back in 1963. But it continues to accelerate. Now you got a little over about 105,000 in cash. So if you held cash versus gold in 1963, 30 years later, if you wanted to buy a house in gold, it was cheaper to buy gold. You needed less of the gold. You still would have had some gold left over. If you had cash, you would have needed 10 times more cash than the original cash that you had. Now, if you fast forward all the way back to 2020, so you've had, 70 years now. If you started at $12,000 in 1963-ish, in 2021, you need $300,000 in cash, but you only need about 8,000 of the original dollars in gold, because gold holds its value, currency gets debased. That's why you have to hold gold bullion over the long haul if you don't know where to put it and it's just sitting there. If you have excess money after you're invested in your assets and whatever you're doing investing, hold your reserves in gold bullion and silver bullion. It's a very powerful tool. This is from the government. They give you this tool. They don't promote it because they don't want you to fucking understand what's going on. You know what I'm saying? Very powerful tool. Let's see sugar. Let's see what kind of cool stuff they got on sugar. So we got world sugar price in U.S. and gold. Gold, obviously, is probably going to be the more stable one. Gold is in red in USD, and the price of sugar in USD is in gray. And you can see if we started at 1960, it was about $28 in gold, and it was about $8 when we were on the gold standard in fiat, backed by gold. Then it skyrocketed in gold. It cost $70 in gold and about $20 in fiat. Now, if you fast forward, the price of sugar and gold has collapsed down lower than what it was in fiat back in 1960, and it's almost flip-flopped, right? It's exactly flip-flopped. So you've went from $28 in gold to buy sugar, in 1960 to, this is just 2012. It's going to be even more crazy now. To in 2012, you only needed about $5 in gold to buy it. So you made extravagant, you gained purchasing power by a lot. And conversely, to the US dollar, you needed about $5 of it to buy the sugar. Now you need about 50 to buy the sugar. You went the opposite way because gold holds the purchasing power. The power of gold, we're going to get into that extensively. I wanted to, there we go. Look at this cool Fed stuff. Consumer Price Index. And they give you graphs and data. Consumer Price Index for all urban consumption. Skyrocketing. Not good. Right? You can see it's accelerated recently. It's not good. It's getting more expensive. Real gross domestic product. The GDP. You can see we haven't made it back to pre-COVID. Did we? Let's zoom out. Seems to be lagging in that data. Maybe I zoomed in too far. I did. You can see we still haven't made it. Let's see if I can do this better. This is a new tool. You can see we still haven't made it back to pre-COVID. And then we crashed. Now we still, with this great economy and record growth, but we need record stimulus because we're in the shithouse. We still haven't made it back, so that's not good. Industry Production Tool Index. We're still not up to the productive capacity that we were at. That's bad. U.S. Euro foreign exchange ratio. You see the dollar's losing value. Unemployment rate. Look at this. It's coming down, but it's still way elevated to higher levels still than the Great Recession, right? Still way elevated, still a huge problem, and you're going to see this start now, just like a stock, pick back up as businesses continue to go under. All employment, look at that. The unemployment level has collapsed, but the employment level is not recovered. Look at this. It's pathetic. Because the way they count it, again, the zooming. But it's a very good tool. We're going to get into that extensively. I am very busy. Just wanted to show you the power of gold. That's the most powerful statement for gold you can ever have. The price to purchase a house in cash versus gold. They started about $10,000 in 1963. Now gold is about $8,000 in gold. If you had that same gold from back then, and in terms of cash, you need about $400,000. It's insane. The power of gold and silver bullion to hold your value. Short term, you can be very volatile. And in the short term, you see with Jerome Powell yesterday, the price of silver and gold bullion has collapsed. And you can see we're trying to form a double bottom. And then, I was looking for something else. This is why I went into my little online. Ascending triangles. What is an ascending triangle? Used in technical analysis, blah, blah, blah. Key takeaways. The triangle needs to run along at least 2 swing highs and 2 swing lows for an ascending triangle. And this is what I believe we're in. And it's a very long ascending triangle. So if it breaks down or up, it's going to have a huge move. And here's essentially your ascending triangle. We're going to go here. And this is in the monthly time frame. This ascending triangle started back in August of 2020. And you can see we're going to make this bright green. And we're going to make this bigger. So this is your ascending triangle up here. See this? We're going to zoom in. This is your flagpole right there. And now we're going to zoom in and dissect this. And why I'm very bullish on silver and why I've purchased more silver. The trend lines of a triangle need to run along at least 2 swing highs and 2 swing lows. Right? Let's see. Do we have that? Swing high 1, swing low 1. Swing high 2, swing low 2. Check. We got the swing highs and swing lows. Ascending triangles are considered a continuation pattern as the price will typically break out of the triangle in the price direction prevailing before the triangle. Although this won't always occur, a breakout in any direction is noteworthy, right? That's why, but in a probability-based way like Vincenzo trades, what was the price pattern going into this? Obviously very bullish, right? So this is a bullish continuation pattern, right? Check, check. A long trade is taken if the price breaks above the top of the pattern. A short trade is if the price breaks below lower trend line. So i.e. a breakout above the $28 level, this green upper resistance that we've hit it now 3 times, or a breakdown below key underneath support. So we got that, check. What does an ascending triangle tell you? An ascending triangle is generally considered to be a continuation pattern, meaning the pattern is significant if it occurs within an uptrend or downtrend, meaning this is a significant long-term consolidation in a bullish move. The trend to aggressively buy or sell assets depending on which direction the price breaks out. A minimum of 2 swing highs check and 2 swing lows check are required to form the ascending triangle trend lines, but a greater number of trend lines touches tend to produce more reliable trading results. Like we're at 3 and 3 right now. Since the trend lines are converging on one another, if the price continues to move within the triangle for multiple swings, the price action becomes more coiled, likely leading to a stronger eventual breakout. And that's what it's doing. Take our industry exclusive measuring tool. This first swing high, you pumped 46% up. Then you crashed 26%, right? Then the next swing high, remember the first one, you went up 46%. The next one, you only went up 36%, so lower. And then remember, you crashed in the first low 26%. The next time, you only went 21%, so coiling up and consolidating. Now, on the third one, you only pumped up 46% on the first one. Now you're down to 20% on the last one. And then on the crash, remember the first one was 30%. Now you're only down to 9. You can see that. Check, check, check. This is meeting all the criteria. Checking up with the coiling of prices. Swing high 1, swing low 1, swing high 2, swing low 2, swing high 3, swing low 3. Check, check, check across the board. Ascending triangle. Volume tends to be stronger during the trading period than during the consolidation period. And that's a check 2. See that? We'll go the volume. You got to be in the weekly, and that sucks. It makes it harder to see it. But this is all checking out. The volume checks out too. It just makes it harder to see it on here. So we're going to zoom back out. I'm not fucking with that. So this is all checking out to an ascending triangle, right? Where's the bullish one that it shows you? So now that we've seen that, now let's go to the picture of it, what it should look like. Look at that. In the bullish. That's exactly what ours looks like. You know? That's what it looks like. Look at this. That's what silver looks like. And the targeted move out of the breakdown would be the bottom, would be a catastrophic. Just like the break up is going to be fabulous. So here's how you measure the breakdown of this. Maybe from the top to the bottom of the formation. And then to the point of the breakout, which is down here. Which would bring us down to $18. That'd be a catastrophic fall with our industry exclusive measuring tool. That would be from support a 27% fall, and old Vincenzo would back the truck up and would buy more silver, and they would need I would need to rent a Brinks truck. All the Brinks trucks in the county that I live in would have to be rented by old Vincenzo at $18 on a breakdown. He would back the truck up and buy thousands of dollars worth of physical silver bullion. But on the break up, that's how I'm getting my $48 target, because I'm diagnosing a ascending triangle in the daily time frame, and it's been in there since August of 2020. So when this thing breaks, the longer they coil, the bigger the break, whatever way it goes. And I think it's breaking way up there. So Vincenzo is stacking gold and silver bullion, and lots of silver bullion between now and this breakdown. And then if it breaks down, I acquire as much as I've acquired in here. From here on up into here, I will acquire that amount down there, because you would have a catastrophic skyrocket after that. But I'm going to continue acquiring 20 to 30 ounces a week of silver until we break this, maybe even 50 ounces a week on this trend line until we break up, right? That's what I think was going on in silver. Ultimate bullish in silver. Major move coming by the end of summer. I expect this to have a huge run. And just to give you short-term price action, you still have time to bounce around in this ascending triangle, support and resistance. Can't be in a 3-minute, got to be in the 2-hour. So you still have time to bounce around and here. And right now you're trying to get a double bottom support. And usually when you break down the candlesticks, you should be for about 3 days. So day 1 was crash. Day 1 of bouncing around today. Day 2 of bouncing around. And then if you're going to make a move next Monday or Tuesday, you should start bouncing. And you can still do this for a few days to weeks in silver in this ascending triangle before you're forced to make a move over here and by late summer. Like, subscribe, and share more monetary and fiscal policy to come.